Dear students, we are solving a problem on final accounts of sole trader, and this is video number 8. And the following problem is given, wherein trial balance of Ms. Malini as on 31st/12/2018 is given. With the help of that, you have to prepare final accounts of that madam, that is Ms. Malini. So trial balance is provided. So further, you are given with adjustments. Stock on hand on 31st/12/2018. So this must be credited to profit and trading account. It must be credited to trading account. And then it is shown as an asset on the asset side of the balance sheet. Then create 5% reserve on debtors for bad debts. So you have to find out the debtors balance. Debtors balance is 60,000. Now bad debt is given the trial balance, but no reserve, so no additional bad debt is given in the adjustment. So from the sundry debtors, you have to create 5% reserve for bad and doubtful debts. And in the profit and loss account, what you have to do is, you have to take bad debts given in the trial balance, add new reserve created, 5% on debtors. From the total, you have to deduct old reserve for bad and doubtful debts. Here, no old reserve is given. Therefore, both bad debts and provision for bad debts could be shown to the outer column straight away without showing that in the inner column, because there is no old reserve. If there is old reserve, bad debts add new reserve minus old reserve. Remaining value should be debited to profit and loss account. And in the balance sheet, you have to deduct reserve for bad and doubtful debts from the sundry debtors. And bad debts given in the trial balance must be traded only once in the profit and loss account. That's all. Next, prepaid insurance amounts 100. So this should be deducted from insurance in the profit and loss account. 600 minus 100. The remaining amount should be debited to profit and loss account. In the balance sheet, it is prepaid, therefore it will come to asset side of the balance sheet. Prepaid insurance 100. Commission earned but not received amounted to rupees 500. So this is added to income. You have been given with commission here 5,500. So this will come to the credit side of profit and loss account, 5,500 plus these 500. So 6,000 should be credited to profit and loss account. And in the balance sheet, since it is an income, will come to the asset side, commission earned but not received. Then salaries are unpaid to the extent of 1,500. This should be added to salaries in the profit and loss account. So you find salaries here 10,500, to that 1,500 should be added. And in the balance sheet, it's a liability. So on the liability side, you have to show salaries outstanding or unpaid 1,500. Depreciate furniture by 10% per annum. So furniture is given here in the trial balance 9,000 rupees. On that you have to create 10% depreciation. You have to charge depreciation at the rate of 10% per annum. So 10% of 9,000 is 900. So 900 should be debited to profit and loss account. So depreciation is to be debited to profit and loss account. In the balance sheet, asset minus depreciation. Asset is 9,000 minus depreciation 900. So remaining amount should be shown to the outer column. These are the treatments and the explanation to that. Capital account is shown on the liability side of the balance sheet. Drawings should be deducted from capital on the liability side. Bills receivable, asset side of balance sheet. Machinery, asset side of balance sheet. Depreciation on machinery should be debited to profit and loss account. That's all. No question of deducting that in the balance sheet from the machinery, because it's a trial balance item. This 1,000 is already deducted from 19,000. Before deducting 1,000, the balance is 20,000. From 20,000, 1,000 is already deducted, and machinery balance is after adjusting that. Therefore, machinery should be shown at 19,000 on the asset side. Depreciation on machinery should be debited to profit and loss account with 1000. Only one treatment. If it is given in the adjustment, it must be treated twice. Debtors balance sheet asset side minus reserve for doubtful debts. Creditors liabilities side of the balance sheet. Wages should come to trading account. Outstanding wages, this is representative personal account. This will come to the liability side of the balance sheet. Only one treatment. If it is given in the adjustment, first it should be added to wages in the trading account and then it should be shown on the liability side of the balance sheet. Purchases, trading account. If there are returns, they have to be deducted. Purchase return should be deducted. Sales on the credit side of the trading account. If there are returns, that should be deducted. Commission is an income, should be credited to profit and loss. Rent and taxes debit balance, it is an expense debited to profit and loss. Opening balance of stock should be shown to the trading account, first item. Salaries, profit and loss account. So salaries outstanding should be added. Traveling expenses debited to profit and loss account. Insurance debited to profit and loss account. Repairs should be debited to profit and loss account. Bad debts should be debited to profit and loss account. Only profit and loss account. It is not to be deducted from sundry debtors in the balance sheet because this is a trial balance item, should be treated only once. It is a nominal account. It is closed by transferring that to profit and loss account. Furniture should be shown on the asset side, 9,000 minus depreciation. Returns, yes. So 5,000 are sales returns. Sales is credit balance and sales returns are debit balance. Similarly, purchases are debit balance and purchase returns are credit balance. So this should be deducted from sales and this should be deducted from purchases. Cash in hand, yes, it's an asset. Cash in bank, it's an asset. And that's all. Look at the solution. Opening stock, purchases minus purchase returns, wages, and on the credit side, sales minus sales returns, closing stock. So if you balance, you will get a net gross profit of 70,000. It is brought down here 70,000. Then by commission 5,500. Okay, to that you are adding commission earned but not received 500. As a result, the balance will be 6,000. And if you look at the debit side, salaries 10,500 and outstanding salaries 1,500, together 12,000 rupees. Traveling expenses 2,000. Then insurance 600, but adjustment is there, prepaid. Therefore, that should be deducted. If it is outstanding, you have to add. If it is prepaid, you have to deduct because that is not the expense of current year. That is why you are deducting. Outstanding, if it is given, it is the expense of current year. That's why you are adding. So here it is prepaid, so deducted 500. And then repairs, it's an expense, so 3,400. Depreciation on machinery given in the trial balance, so it should be treated only once. It's a nominal account, it is debited to profit and loss account. Rent and taxes, nominal account, expense debited to profit and loss account. Bad debts given in the trial balance, therefore it is treated only once. That is, it is closed by transferring to profit and loss account. Had it been given in the adjustment, it must be treated twice, once in the profit and loss account and again in the balance sheet. And further, if there is provision for bad debts in the trial balance, then bad debts in the inner column 3,500, add new provision for bad debts in the inner column as an addition to bad debts, less old provision for bad debts given in the trial balance. But here it is not there. So simply bad debts can be shown to the outer column. Provision for bad debts also could be shown to the outer column. Depreciation on furniture, it is 10% of that is 900. It should be treated twice because it's an adjustment item. So once here and again in the balance sheet, furniture minus depreciation of 900. So if you balance the profit and loss account, the value you get is 43,700. Come to the balance sheet. So cash in hand 500. These are all items of current assets. You have to show the assets in the order of liquidity or in the order of permanence. I have shown it here in the order of liquidity. Most liquid assets are shown first and the least liquid assets are shown at the end. So cash in hand 500 cashier bank 2000, prepaid insurance 100, commission earned but not received 500, bills receivable 22,000. Debtors, I told you, provision for bad debts given in the adjustment should be deducted. So 3,000 is deducted. As a result, the value is 57,000. Okay, yes. And then, yes, closing stock 1,000. Supposing bad debt is given in the trial balance or adjustment, debtors minus bad debts given in the adjustment minus provision for bad debts. That way you should have shown. But here bad debts are not given in the adjustment, so no deduction from sundry debtors. The balance of sundry debtors is after deducting the bad debts given in the trial balance. Closing stock is 1 lakh. Furniture 9,000 minus 900, so 8,100. So machinery, so depreciation is already deducted, therefore 19,000. Come to the liability side. Unpaid salaries is a liability because it is yet to be paid and it is for the current year. Wages outstanding again to be payable and that is for the current year. So we have to take 12 months wages and salaries, so 1,000. Creditors 58,000 rupees, no adjustments here. Capital as per trial balance is 1,20,000 and net profit as per profit and loss account, look here 43,700. We add that. Then drawings given in the trial balance, you find drawings here somewhere. Okay, at the beginning it's given drawings for 15,000, so that should be deducted from capital and as a result net capital is 1,48,700. So if you go for totaling, total is 2,09,200. So balance sheet tallies. So that's about the solution to this particular